Good morning, everybody. It's Monday morning, October 14th. 2 years and 1 day since the bottom of 2022, and we are getting ready to start OPEX week. It's not quadruple witching OPEX, it's simply OPEX week. You have the VIX expiration on Wednesday morning, and you have OPEX for all the major stocks and indexes on Friday morning. So if you are going to be playing the Friday, October 18th expirations, SPX, you want the weekly, not the AM, and it's a mistake rarely made, but it needs to be pointed out. So anyway, I've got the futures up here, and looking over here on the right is the Russell 2000, and as you can see, extremely overbought, embedded overbought, whereas you are getting little bits of rejection off of your overbought warnings on the ES and the NQ. And we're starting to get a little bit of a turn down, although there is nothing but a dip for now over on the Dow Jones. I will come off of that and bring you on to today, because today, as relatively calm as futures are, it's been a pretty, I don't want to use the word hostile, but it's been a pretty active night over in Asia. You've got North Korea with their military on the border, ordering everybody to get ready to fire upon South Korea. The Chinese military, the PLA, conducted simultaneous drills to the north and south of Taiwan Island, focusing on missions such as port blockades, regional power control, maritime assaults, and land strikes. And in other news, you have Netanyahu over there telling the United Nations that they need to get out of Lebanon so that he can go in there. So it's been a, relatively non-calm night when it comes to those kind of things. And you've also got Biden coming out and throwing Kamala Harris under the bus. So 8 o'clock, OPEC monthly report, nothing significant to do with that. 9 o'clock, we've got Fed's cash carry speaking. 1 o'clock, the New York Fed inflation expectations. And then at 3 o'clock, Fed's Waller. Absolutely dead zone, nothing day as far as data goes. So I will quickly bring you over before we go to the charts and show you after the market opened last night. I shared out here what I consider to be the zero DTE risk for today, Monday, with 57.95 remaining the pivot below. Buy the 5800 calls, sell the 57.95 calls, looking for a move down to through below 57.95 for these to work. $3 to $3.50 credit. They're actually a little bit better now, as 58.09 is where we were. We are green on the morning. We're actually up a couple of points. And here's your post here on the Russell 2000 being extremely overbought. The Russell 2222 is just underneath, as is that IWM 22141. So I'll bring you quickly, very quick, because there's not a lot to cover. There was nothing. You've got 5 green weeks in a row. It's not illegal to have 6, but it's pretty rare to get 4, let alone 5. We are green on the month, and this is definitely something to take note of. We are green on the month of October. We're up 1% for the month of October. 58.15, we opened at 57.73. Over on the spreads, again, I have that trade already notched in there because that's where I see the best risk-reward play, 5800, 57.95. The low on Friday, 57.75. The low on Thursday, 57.65. So you've got that to keep in mind. QQQ, also 5 green weeks in a row, trending up here in the 493s. 487 continues to be your main pivot. And then over here on the IWM, having posted its green week after the 2 red weeks in a row, even though the red week prior, we got to move that down, was only down less than a quarter of a point. You're in the 220s, you're in the 220s, you're in the 220s. These need to be green. That's for me, not for you. And I'll just do that real quick. But you're in the 220s. And as you can see, when you have been in the 220s prior, September 18th, 224.94, so call it 225, being the tippy, toppy, top of the IWM. Not much time spent up there. One close at 224, all the rest of your closes being at 221 or below, but basically right where you close there on Friday. So don't go jumping in front of yourself and trying to get into calls knowing that there is very, very little upside that you have left over there. So I will take you onto the charts real quick and we'll move on from there and get into the day. Here. SPX two-day Thursday, Friday view. Here's your 57.95, your high over here on Thursday. Here's your 5,800, your low over here on Friday. Not the low, the dip. The dip that we had into the afternoon here on Friday. So this gray zone is the risk area if you are looking to get involved with that better risk reward, one-to-one, better than one-to-one relationship on the trade. 57.95, 5,800 is where I'm looking at. On the upside, this thing can still go and float another 25, 30 points to the upside. There's absolutely there's no laws against it. There's no rules against it. We have the full moon this week, so we are looking for a top to be occurring during the course of this week. I've got the 20-day, 30-minute chart over here on the DIA, just so that you can see the post-FOMC gap up, the lack of contribution of being able to break down below that major 418, 419 pivot, and where you are now up here suspended up at 429. You have your gap here from Friday, your gap being down here at 424, but for all intents and purposes, this DIA is much better looked at, viewed out. December, January, you could even look at March and even look at June. QQQ, the exact same story. Here we are looking at where we came from over here on the post-FOMC gap up off of 471. The inability to break down below 480.50 with any kind of conviction. There is a gap over here that I have not drawn on my chart that will need to be drawn, and there you go, it is drawn. I will make it accurate to the penny later on, but these are your gaps. You've got your gap down here below 485, and you have this absolutely incredible resistance up here at 494, where that gap, just to be clear, is filled up here at 496.60. So that's where you're at with your QQQ. IWM, as you see, 221.41 here on Friday. Rejected it, closed below it. You're fractionally up above it, and there you can see, and we'll zoom out for the bigger, broader, wider picture, and we will zoom out even further for a much bigger, broader, wider picture going all the way back to February, January. There is not a lot of life up above this 2022 open, 223.71, 225. It doesn't even breathe up there. It completely suffocates. So fractional, tiny little bit of space to your upside over there. Because we are trading the rut, or there are people that are trading the rut, I'll bring the rut on to you here. You have this tiny little gap on the rut up here at 22.50, having filled that one over here on Friday. And there you go. There's your 22.50 right up there, and I will make sure to post that in the room so that everybody sees it that is trading the rut. Here's your VIX. Your VIX still hanging in the 20s, and this, like I said, I've never seen anything like this in 28 years. Never, ever, ever seen anything like this. So here's your VIX. Your VIX hanging above 20. Still chilling below 2102 where we were for basically Wednesday, Thursday, and early portion of Friday. 2102, 2102, 2102. So cover on here a couple of stocks. NVIDIA, like I've shared, NVIDIA. Until NVIDIA is below 131, the QQQ is not going to dip, and everything above 131 over here on NVIDIA, I got nothing for you. I got no comments to give you other than, you are extended up and above and beyond anything that I can project for you. Over here on Tesla, zoom out. As I shared a couple weeks ago, 264 All that above that 258.94 is all fluff. You had your major gap down there on Friday because of the robo-taxi. I can remove this gap. We are hanging above a tiny little gap from back in early September, but your main pivot, your main strong, incredible pivot is right here below the 100-day moving average at here at 216, sitting there at 207. So there's not much meat left on the bone if you are going to try and get short on Tesla. Over here with JP Morgan, because obviously JP Morgan being very significant, we can move that, having reported earnings on Friday. This is your wider view here on JP Morgan and 217.26. This is obviously the primary algorithm pivot location with 220, 221. Let's just go to 220. Yeah, actually, we'll go to 220. 221.50 being the support that has yet to have been broken since that earnings spike right at the opening bell there on Friday morning. You come out here and just remove these because this is pretty damn cool. No, I want to see, hang on, sorry guys, hang on. I want to see show extended hours. Yes. So here we go. Looking at the extended hours on JP Morgan. This is your JP Morgan earnings. Boom, boom, boom. Earnings come out 7 o'clock. A little bit of a move, or right around here. A little bit of a move to the downside. Boom, boom, boom. Here's your big shake right at 850, 955. Great move down to 210. Looked fantastic. Looked great. Had a great setup. Everything looked amazing. Right here, opening bell right here. Boom, boom, boom. And then just absolute skyrocket. And it was all over with. Within 7 minutes, all of it over with, up here at 221. After that, it was just, doing the old Simpsons ha-ha in your face because you weren't getting any kind of a dip below that 221.50. So 221.50 up here, if you are involved watching, playing JP Morgan, 217.26 is the big pivot. 210 down there below that. So enjoy your morning, enjoy your Friday or your coffees, start of the week. Like I said, the risk trade, I like it. I think it's the best play. Don't want to play it? Don't play it. You can time it perfectly. There will be a moment during the trading session today where you will be able to perfectly time a trade. So focus on that, not what's easiest.